We witnessed this for the first time in the history of Shiba Inu. We all know that trillion figures are serious. However, things are different this time. The situation has completely gotten out of hand, and ordinary investors are clueless on what to do. Whales appear to have their main strategy set, and this could be the biggest opportunity. What is it about, though? Why can't we afford to miss this at all costs? What's going on in the Shiba Inu world? Let's find out then. Warning, Shiba Inu is blazing its own trail in the cryptocurrency space, according to Santiment's most recent research, which shows a little 5% rise in the last 48 hours. In just 1 month, whales have been steadily amassing an incredible 6.57 trillion Shiba Inu tokens, indicating a bullish trend, according to the crypto analytics portal. This encouraging development coincides with a more general decline in the cryptocurrency market since June, when values have fallen to levels not seen in months. Shiba Inu has had a lot of difficulties in spite of this general trend. It has recently had a precipitous 43% decline from its top on May 29th. However, prices have started to level out due to less selling pressure, which has given Shiba Inu a little lift in its recuperation efforts. From its lowest position on July 5th, Shiba Inu has so far recovered 13%. You should realize that a cryptocurrency with a market value in the billions would see a 33% growth. It demonstrates that Shiba Inu has the fortitude to bounce back quickly when market conditions improve, even in the face of recent difficulties. Investors are reassured by this performance, which also shows that the coin can tolerate market turbulence. Shiba Inu's comeback is a source of hope and relief for individuals who suffered losses during the recession. It suggests that they may be seeing results from their perseverance and faith in the coin. Many people who kept their investments during the tumultuous time now see a way to perhaps recoup their losses, which has a significant emotional impact. According to Santiment, Shiba Inu's current success can be partially ascribed to its weekend separation from the larger cryptocurrency market. This unusual circumstance has drawn the interest of numerous onlookers. Shiba Inu is no longer paying as much attention to the price fluctuations of other alternative cryptocurrencies as it once did due to decoupling. This independence is intriguing since it implies that investor mood and ecosystem-specific factors are now affecting Shiba Inu's price dynamics. Shiba Inu saw its biggest daily increase in 4 months last Saturday, when it jumped a whopping 16% in a single day. Shiba Inu last had this kind of bullish momentum on March 4th, when it experienced a remarkable 59% jump. Considering the history of Shiba Inu, this accomplishment is even more noteworthy. Its capacity to experience quick and dramatic price swings was seen in March, when it famously tripled in value in a single week. Shiba Inu's volatility and capacity to garner significant market attention are confirmed by this recent spike. The next Sunday, Shiba Inu saw a 10% decrease after the 16% increase on July 6. In spite of this setback, it was able to maintain its advances above prior lows and started the week with 2 days in a row of intraday gains. At the time of their report, Shiba Inu had gained 5% in just 48 hours, according to Santiment. It is essential to stay above previous lows as this confirms the importance of price increases. For example, the initial increase would have been viewed as a transient spike rather than a long-term rebound if Shiba Inu had not been able to maintain its previous low level following the 16% jump. This steadiness shows that buying support and investor confidence are holding strong, both of which are necessary to maintain the market's upward pace. To give an example, consider a runner who leads a race by a considerable amount, but then rapidly slows down. The runner's performance improvement is genuine and long-lasting if they are able to keep up a consistent pace above their prior best times. Comparably, the cryptocurrency market's ability to hold above previous lows indicates that recent gains are holding firm and could spur additional expansion. Over the past month, Shiba Inu has experienced remarkable accumulation activity in addition to its noteworthy recovery. Since June, 6.57 trillion Shiba Inu coins have been acquired by the top 150 largest addresses outside of exchanges, according to Santiment. Their aggregate holdings have increased as a result of this accumulation binge, suggesting that big investors are very interested in and confident in Shiba Inu's potential. Conversely, for the past month, exchanges have been cutting back on their Shiba Inu holdings. In particular, since June, the 150 biggest exchange addresses have reduced the amount of Shiba Inu tokens they own by 5.53 trillion. For Shiba Inus, this is regarded as positive news and an optimistic indicator. It usually indicates that investors are transferring tokens into private wallets for long-term holding rather than keeping them available for instant trading when significant quantities of a cryptocurrency are taken out of exchanges. This conduct suggests a high level of trust in the coin's possible future price. A scarcity impact brought on by reduced supply on exchanges may also raise prices when demand stays the same or rises. Shiba Inu withdrawals from exchanges are clearly on the rise, according to data from CryptoQuant. In 24 of the last 31 days, exchanges have seen net outflows based on the Exchange Net Flow Indicator. There was a significant net outflow of 8.7 trillion Shiba Inu tokens during the course of these 24 days. This pattern implies that wealthier investors were covertly acquiring more tokens during the current market drop, while many retail investors may have been panicking and dumping their Shiba Inus. The significant sum taken out of exchanges suggests that these whales are taking a calculated risk by securing Shiba Inu coins off-market, possibly in anticipation of future price spikes. Shiba Inu's exchange reserve has fallen to 143 trillion tokens, the lowest amount in the company's history, as a result of ongoing withdrawals. The fact that there are far fewer tokens accessible for trading on exchanges, which could result in more scarcity, makes this a noteworthy milestone. According to historical data, significant price increases have frequently accompanied periods of dramatic drop in Shiba Inu's exchange reserves. A similar pattern, for example, was seen in February, right before Shiba Inu saw an incredible 30%-70% surge. Because investors saw quick and significant gains in a short amount of time, the market was in a frenzy at the moment. The question of whether history will repeat itself is raised. Shiba Inu may be preparing for another big price shift given the present on-chain data, which shows historically high volumes of exchange withdrawals and decreased reserves. Market watchers are intrigued by this situation, and investors who may remember the thrill and possible profits from past rallies are encouraged. However, why do whales amass historically large numbers of Shiba Inus? Are they seeing things that we are not? A member of the Shiba Inu development team recently posted about their heavy schedule, pleading for help and praising the commitment of important team members like Satoshi Kusama and Kyle Daria. This remark implies that the staff is still dedicated and grateful for community support, even in the face of difficulties and perhaps fewer public updates. It is possible that the development team's commitment and openness may increase investor confidence. It shows continuous behind-the-scenes work to enhance and grow the Shiba Inu ecosystem. Whales may be observing this commitment as a sign of trust in the project's long-term sustainability and room for expansion. By relating this to whales' prior token withdrawals from exchanges, it is conceivable that they see the team's commitment as encouraging. They might think that continued research and development will result in features or improvements that will be more useful and valuable in the future. As a result, people keep accumulating tokens in anticipation of a possible price increase fueled by both market demand and technological advancements. However, what do you think of this? I'd love to hear your opinions, so please leave a comment below. Make sure to click on one of the videos displayed on the screen if you're interested in learning more. Consequently, this concludes the video. Please remember to leave a comment in the comment section and like the video if you liked it. When it comes to the YouTube algorithm, this is incredibly helpful. Let's spread the word about this, so please share this video with as many people as you can.